All right. Hello, everybody out there in Facebook world, LinkedIn, and Twitter. It's Antonio Montier, California Homes. It's a Lifestyle, here with Boyd Robinson of Fairway Mortgage, the fifth largest lender in the United States. Homeownership 2018 Financial Fridays. We have some really good information for you today. We're going to talk about, give you some websites and what have you for some down payment assistance programs. And we're also going to talk about some alternatives to purchasing single family residences. For those of you who feel like you don't want to take on the brunt of a mortgage payment, we're going to give you some other options during this segment. So we're just going to jump right in. And again, happy Friday to everybody, if I didn't say that before. So Boyd, why don't you just jump right in?
Thank you, Tony. So first and foremost, we're not going to I don't want to get too much into the weeds about down payment assistance programs, but what we're going to share on our video, Tony, with his great editing skills, is going to put a couple of websites on the video for you that will take you directly to the servicer of the two down payment assistance programs that we talked about 5-6 weeks ago. And that's the Golden State Financial Assistance Down Payment Program, as well as the CalHAFA Down Payment Assistance Programs. We could talk for hours on this video. We don't want to bore you guys, or I don't want to bore you guys, since I'm the one talking about this stuff. But we're going to put those links on there. Go on them. There's a little home ownership link that you can click when you get on there, and it will give you all the information that you can handle on that stuff. If you have any questions on it, my information will be on the video. I'm here to answer those questions for you. We can start the process. We can talk about the process, all that kind of good stuff. So, Tony, we'll put those links on there for you.
Absolutely. I was talking to Boyd earlier before we began the video, and I was saying to him that let's talk about the possibility of, let's say, a single individual that is seeking home ownership, and that person really doesn't want to foot the bill of a $3,000 or $4,000 mortgage payment by themselves. And so we begin to talk about it. It's like, well, that person is a really good candidate for a duplex, for a triplex, and for a fourplex. And so the reason why we stopped at fourplex and didn't go into fiveplex, because everything up from 1 to 4 units is considered residential. Anything over 4 units, meaning 5 units and above, is considered commercial. Now here's the thing. When you stay within that 4 unit ratio, you're able to buy a duplex, triplex, or fourplex as an owner occupant if you occupy one of the units. Now the good thing about that, as Boyd was telling me earlier, is that if you purchase duplex, triplex, or fourplex, you can utilize 70%, if the units are already preoccupied, 70% of the rental income to help you qualify for the loan that you're applying for to purchase the units. Then of course after that, then 100% of the proceeds are yours to help subsidize your mortgage payment.
Absolutely.
So those are different alternatives that you have to home ownership. Boyd's going to talk a little bit more about it and also dive into some interest rate information that could possibly be of interest to you as well.
Sure, perfect, Tony. So yeah, a lot of folks out there don't realize that they can purchase a duplex, a triplex, or a fourplex. And for the most part, the financing is all the same. When we're talking about FHA requires the same amount of down payment on a single family residence as it does a 4-unit property.
Wow.
As long as you're living in one of the units. FHA, it has to be owner occupied.
And that's 3.5%.
3.5%, correct.
Wow.
Now, conventional is a little bit different. Conventional on a duplex requires 15% down, though there are some programs that will allow for a little bit less. And on a 3 or 4plex, they require 25% down. So a little bit different when we're talking about conventional. But it is, like Tony said, it's a great way to get into a property that's income producing. So let's talk about that a little bit. I'm just going to throw out a hypothetical. This isn't a real life scenario, but it's probably pretty darn close to a real life scenario. Let's hypothetically say, and I'm going to use my friends Summer and Holly that have a listing. They're real estate agents, so I know they're okay with me saying their name. They have a listing in Oakland right now. I believe it's a duplex for about $450, $449-ish. we could do that property with 3.5% down. Both units are a 2-bedroom, 1-bath. So it actually would be maybe not great for a family, but for first-time home buyers with no kids, this would be a great opportunity to get into a property with $14,000-15,000 down and closing costs. And when you move into the property, I'm just guesstimating because I don't know enough about that particular unit, but they can probably collect $1,500 to $2,000 on the other unit to offset their mortgage payment, and their mortgage payment's going to be less than $3,000. So at the end of the day, they're going to be out less than $1,000 a month to own that property, right? So it's a great way. And then in 2 years from now, they move out of that property, they rent the other unit, and now you're cash flowing. Now you are building wealth, right? We're talking about a long-term solution here, not a short-term solution. If you're an investor and you're looking for a short-term solution, yeah, we'd love to help you, but that's not what we're talking about today. We're talking about a long-term investment, and you can do that with a 2, 3, or 4 unit property. And then as we get to other units, as long as you live in one of the units of a 3-plex or one of the units of a 4-plex, you're collecting rent on those other units, and most likely you'll probably cover 80 to 90% of your payment if you're in a 3 or a 4-plex. So those are great opportunities, especially if you're looking to go FHA. So for those folks out there that didn't even realize it, you could buy a unit's property with an FHA loan. It is absolutely attainable, and we would love to help you with that.
Absolutely. And remember, we talked about this on our last segment. I know when Boyd threw out the number $10,000, $15,000, $20,000, those of you who have 401ks, those of you who have pensions that allow you to draw down for home ownership, because there's some pensions that will not allow you to do that. But for those of you who have 401ks and you have those pensions that allow you that opportunity, what better reason to tap into your retirement than to help you, to assist you with building wealth? Boyd also mentioned something in our last segment about the amount of money that
a homeowner, and this was something that was sent out by the National Association of Realtors, that a homeowner has 30 times the wealth of a renter. And it makes sense. That renter, we're throwing away your money every month. It's like a hotel room, right? And you're getting no tax advantage. Well, when you're owning a home, the home's appreciating and you have a tax advantage.
There you have it.
Win-win, right?
There you have
totally.
it. Folks, think of this as an opportunity. Again, for those of you who do not want to foot a mortgage, $2,000, $3,000, $4,000, and you really want to buy in this market, think about a duplex, think about a triplex, think about a 4-plex, because again, those are other avenues that you can take to achieve your bottom line goal, and that is home ownership. And as Boyd indicated early on, you stay in that duplex, triplex, or 4-plex a year, 2 years, 3 years, you rent out your unit, tap into the equity of it, purchase you a single family residence, put enough money down to where your mortgage payment is comfortable for you as a single person or as a husband and wife just starting out, or even for someone that's seasoned in home ownership. You can still create some wealth to assist you with your future endeavor of buying a single family residence.
Absolutely.
And this is just one avenue to do it. That's the whole purpose of these videos, is to give you information that will assist you with attaining your goals. Boyd, we talked about interest rates too. What are rates doing right now?
So, yeah, first I want to preface this, don't let the interest rate market freak you out, okay? If you have access to an interest rate chart, interest rates are still historically low. They're not in the 3% anymore. That obviously wasn't attainable, but we're still hovering in the mid to high 4s, and that still is not a bad interest rate. So a lot of my first-time home buyers and the ones that Tony refers to me, they ask me this question like, hey, Boyd, is this a good time to buy? I honestly believe in my heart it's always a good time to buy.
Absolutely.
Just basically on the net worth, point, as well as having the tax advantage point.
Absolutely.
As long as you're buying for the long term, it doesn't matter that your house goes up and down. That's all part of it. You're gonna have a 30-year payment that never changes. And in 30 years, your house paid off, and you don't have to worry about all this other stuff, right? So But where interest rates are at right now, depending on your scenario and what type of loan product you're going with, it could vary a lot. But I wanted to give everybody an example of a typical loan that we're doing right now and what it could potentially be, because the projection is that interest rates are going to creep up the rest of this year and probably into 2019 until we get close to the next recession. We may be 2, 3, 4 years away from that, who knows, but we're due to have one. So rates aren't going to come down until something like that happens, right? So the real life scenario I wanted to use today is a $500,000 loan. Your loan may be a little less, your loan may be a little bit more, but this is a good medium point. So at 4.75, which is the rate that a lot of folks are getting right now on a 30-year fix, we're not talking about an ARM or adjustable rate mortgage. A $500,000 loan with a 4.75 interest rate will have a principal and interest payment of $2,608.24. Okay, that does not include taxes, insurance, and any MI that you may have, but that's just the principal and interest payment. Now, if rates go to where we think they're going to go, a simple increase of just 1% to 5.75, that $500,000 loan now comes with a payment of $2,917.86. Okay, may not seem like a lot for you guys out there, but that's over $300. It's $309 for the same loan. So
Wow.
if you're waiting for that bubble to burst, or you're waiting for interest rates to get better, to buy a house, to pull the trigger, it's silly. It's not a good time.
That's right.
And the reality of it is, and I always keep my finger on interest rates for my customers. When rates get better, we can do a no-cost refi for you, right? If rates get down and back into the low 4s or high 3s, or we can look to put you into a 15-year fix after you've been in this loan for 5 years and get you a better interest rate on a 15-year fix. A lot of options, but the most important thing is to get into the house now and take advantage of that wealth, as well as those tax consequences. Because that same house, not only is it going to appreciate probably 5% between now and when rates get higher, but your interest rate's going to be higher. So you're losing money by not buying a home now.
Absolutely. And he's telling you the truth, folks. No matter what you're hearing out there, and we continue to say this during every segment, no matter what you're hearing out there, now is still a good time to purchase a home. No matter what you're hearing. Don't wait. If you wait, pricing is increasing, and I'm going to tell you, the next couple of years, unless you're pulling down some real serious money, it's going to be virtually almost impossible to purchase a home. That's how quickly homes are appreciating in value. They just really are. And if you can, it's going to be in a neighborhood that you're not going to desire to live in. So do like I did. Pull the trigger. I made a decision last year, and I pulled the trigger because I did not want to pay someone else's rent.
And look, he's still smiling.
And I'm happy as a lark. And my property has appreciated.
Absolutely.
It's appreciated. So again, this is information for you and your family to be able to make some really good decisions to help improve your life and to achieve your goals in life. And we're just, again, hoping that all of the information that we've disseminated today is useful. We have a YouTube channel that you can subscribe to. It's Antonio Mattier. If you just type in my name, Antonio Mattier, you'll be able to go to the YouTube channel and see this video in its entirety. Unfortunately, due to the length of the video, LinkedIn and Facebook sometimes cuts the video off. So if you want to see it in its entirety, please go to YouTube and subscribe, and you'll be able to see some of the previous videos that we've completed as well.
It's not going to have the outtakes, though. We're not putting the outtakes because those are not.
Yeah, the outtakes are funny. They're funny as crap.
Hey, Tony, let me finish on one point here. So, we don't prop ourselves all that much, but one thing why work with us? Right? Why work with Tony and Boyd? Just want to point out a recent win that we just had. We have a couple that is in contract. They went in contract on May 30th. May 30th. And we're going to be closing in on that. That transaction will be final on June 19th. So
done.
29 days. So 29 days. So why is that important? Well, one of the reasons that this contract was accepted was because Tony was able to convey our speed to close to the listing agent, and that was important to them. So that's another feather in your cap when you're working with our team, because right now, what differentiates one offer from another, right?
That's right.
Our ability to be able to close quickly and
Speed
get
of
the
the
seller
close.
their money
That's right.
is,
That's
I think, was something that put us over the top.
That's right. And actually, we could have closed the deal. Boyd was ready to have this thing done in 15 days. The only reason why we're not closing in 15 days is because the sellers are out of town.
Yeah.
If they were in town and had completed their signing paperwork, then we would be ready to go in 15 days. We're done.
Yep.
We're ready to go. So again, as he said, it's a wonderful reason. We don't puff ourselves up, but it's a wonderful reason to use Tony and Boyd, because we get things done. And it does make a difference when you are submitting an offer and you're up against 3 or 4 offers. Pricing isn't always the winning bid. It's whether or not you can get the deal closed in a timely fashion.
Absolutely.
You know, the quicker the close, the more attractive your deal. So again, we're in great hopes that you've enjoyed these videos and that they're assisting you with achieving your goals. And we look forward to seeing you next week on Financial Fridays. Thanks so much, folks.
Take care.
Thanks, Boyd.